Well, welcome to another episode of the Trading Bell. This week, we're talking about the banking industry, and we are at the I&M Bank here in Nairobi, and we'll be speaking to the Chief Executive Officer, Kihara Maina, on what trends we are seeing in the banking sector. But really, who is Kihara Maina? Let's now take a look at his profile. Kihara Maina joined I&M Bank as the Chief Executive Officer and board member in May 2016. He holds a bachelor's degree in mathematics from Moore University and an executive MBA from the University of Chicago, both School of Business. Maina began his banking career in June 1993 at Stanbic Bank, Kenya, then moved to Barclays Bank in 1997, where he served extensively over the years, ultimately taking up senior leadership positions. Prior to joining I&M Bank, Kihara was the managing director of Barclays Bank, Tanzania. Well, many thanks for joining us for this conversation around the banking sector. I'm now joined by Kihara Maina, the CEO for I&M Bank. Many thanks for making time for us.
Thank you.
Well, you've been at the helm of the bank for nearly 2 years, and these 2 years have been preceded by a very turbulent time in the financial sector. Let's just pick it up from how has the impact of the rate cap been for I&M Bank, and is there some hope now that you're seeing the government changing its stance, saying that they'll be making amendments?
Well, I think overall for the banking sector, the interest rate caps were quite impactful. And they led to quite a number of changes that perhaps some were good, some were not so good. I think earnings have certainly been depressed. We've seen returns on equity drop for the industry. We are not immune to this. We've seen a shift in focus when it comes to who is getting credit. So credit access has suddenly been constrained. And similarly, we have also seen a shift to quality, if you like, when it comes to lending. So sectors have seen themselves being locked out of the credit markets. And at the time it happened, you were already seeing a decline in credit that was actually being provided to the private sector. Mm-hmm. So this deepened it as well. So the challenge is that we are probably seeing some significant decline in economic growth as a result. We don't know how impactful this is going to be, but certainly it has slowed the pace at which we would have been able to grow the economy. Mm-hmm. And for banks, you've also seen a recalibration. People are looking at different things to generate revenue streams. You've seen a greater focus on service-led income. We certainly have driven that particular line.
All right. And Kihara, before we talk about diversification in terms of revenue lines, of course the central bank has been very categorical, saying that factors that has sort of led to a dip in lending in the Kenyan economy. Of course, this has also been influenced by other market fundamentals, where we had a prolonged election as well as depressed rainfall, and this sort of had a sort of a chain event when it comes to overall lending in the markets. And from where you sit, how valid is this narrative?
Yes, so they are correct that we had already seen the dip in credit to the private sector. It started actually way back in 2015. But what we feel is that, and you'll see the research that has come from the KBA, what we feel is that the interest rate cap has actually lengthened the period of recovery that you'd normally have for any decline in credit to the private sector. So we have to agree that as a policy change, something that was well-timed, let's say. And as a result, it has led to the unintended consequences that we had talked about, mm-hmm. and had warned against. They have come to pass. And it is not, collusion, as some quarters would like to talk about.
Price fixing.
Exactly. No, we actually have a very competitive banking sector. And right. You will see that pricing for customers is actually very competitive. Now, we do appreciate that structurally there have been challenges that have led to significant pricing when it comes to banks to customers. And we have talked at length about addressing some of these structural issues. We can't for example, expect that you're going to get slow, justice, and that then you're not going to see that being reflected in pricing, because at the end of the day, that is capital that is not working. We make sure that we can prepare people to better use credit, and you've seen some of the initiatives then that the KBA has put out, providing training, providing now commitment by banks to actually provide concessionary pricing where needed to the SME space. So there are lots of these conversations happening, but we need reciprocation as well from a lot of different quarters to say, well, we're going to also take the feedback from the banking sector and address these issues.
Interesting. And one thing that many Kenyans, of course, are asking Mr. Kihara is, as much as we're seeing the rate cap, banks are still reporting profits at the end of the day. So it's quite ironical. But moving away from that, as a bank, walk us through the numbers, really, in terms of what has been the biggest growth area for I&M Bank. Of course, I know you've been doing a lot of diversification and coming up with new channels for delivery, especially to the fast evolving clientele.
Yes. So, well, let me first address the issue of what are perceived to be outsized returns by banks. Actually, yes. So we do big numbers being reported by banks. Yeah. But what people fail to link that to is the amount of capital that's actually being deployed to be able to get those returns. Yeah. So when you look at earnings that are in the billions, and you look at returns on equity that are now averaging somewhere around the 15% mark for the sector, maybe even slightly lower. We'll wait to see the results. You can see that you need a significant amount of capital to be able to generate even 1 billion shillings, right? So the returns on equity are not actually outsized. In fact, in a lot of quarters, we are getting concerns from commentators saying, well, why are they depressed? And even at the pre-cap period, yeah, we still saw returns on equity that perhaps were not what you'd say outsized in the early 20s if you're lucky. And you expect to see, especially in economies like ours, you expect people to show returns of that kind.
And Kihara, you sit in a very strategic position, not only by being in the financial sector, but really looking at the developments we are seeing, especially with the digital disruption. Gone are the days where clients would walk into banking halls, queue, then withdraw cash or deposit a check or simply just withdraw cash. Nowadays you're seeing it's a battle for convenience where people at most would really go to the ATM if it comes to accessing their financial products. And as a bank, how have you been able to stay afloat even with this massive digital wave that we are seeing across the country, sort of changing the model where we used to have the brick and mortar banks? Banks would pride themselves, just say we have 100 branches across the country. We are opening our 101 branch. What has been the story for your bank?
Well, first of all, let me say that the banking sector as a whole has always been a very early adopter of technology. Secondly, technology should always be viewed from the standpoint of how it actually helps humanity. You want to be able to get more effective at what you do. You want to spend time on the things that are really more important to you. And technology does that. It helps free up time and makes it convenient for our customers to actually do their banking. So we have embraced that at I&M. We have understood that, yes, a network of branches is important. Sure. That cannot be gainsaid.
There's still that farmer who wants to see a physical bank.
Precisely. And you actually need to be closer to your customers as well. If you are out in Nanyuki, for example, sure, and you know the nearest place you can get a branch then is Nyeri, that's going to be quite a tall order to actually make that access. So you want to get closer, right, to your clients. But technology enables you to do that in quite a number of ways. So the ATMs, for example, were a very big introduction into the market. We ourselves have a network of about 58 ATMs. They're important because we are still heavily dependent on cash in our economy.
Yeah.
And we need to be able to provide access points for cash. It helps us to reduce the burden at the branch by providing automated telling services. But we want to go beyond that and say, what else can an ATM do? So that you're not just simply withdrawing cash. Maybe you can deposit cash. Maybe you can transact at the ATM and move money around and so on. Buy your utility, make your utility payments and so on. That we need to find more and more uses for ATMs. But more broadly speaking, the advent of the digital technologies has meant that we now truly have a way to get closer to our customers, because suddenly you're working just simply from your office to be able to do all your banking services. We need to enable that. We need to make sure that people feel comfortable and safe actually using these technologies. So we have to train people who may not be as digital savvy on what benefits make it as easy and intuitive to use as well. So this is what we have been doing at I&M. We have embraced it. We have set up a digital factory we call iCube.
Awesome.
And the idea is to really think through a lot of the different changes that we need to make to ensure that our customers' lives are truly made easier.
All right. And so talking about this digital disruption, how much have you put in as a bank? Of course, having a digital factory is not something you hear every day from the banking community. And talk to us about the size of the investment, as also give us your closing remarks really around where you see the banking industry heading, and what are some of the low-hanging fruits when it comes to customer conversion and, of course, growing the business at the end of the day, making the balance sheet look much neater.
So I think the way to address that is to really talk about what our thinking in terms of strategy is. First of all, we really truly are just focused on how we can get closer to our customers. How can we make sure that we're truly customer-centric? To that end, we know that we've got a lot of partners that we want to work with, and indeed in our purpose we say that we want to be partners of growth for all our stakeholders. So thinking through those lines, we then have devised a strategy we call Imara, which really just focuses on how do we actually improve connectivity with our clients?
Sure.
How do we make sure that we are actually designing products and services that are suitable for them? And we believe that that is going to drive the kind of penetration in our chosen market segments. We know we can't be the bank for everybody. We have to select who we're going to serve so that we can serve them well. And we have done that. We've created customer value propositions that speak to the segments that we want to address. We're looking at our regional presence because our clients, especially in the corporate space, are increasingly looking at the regional markets. So we want to make sure we deepen our regional market presence. And we want the quality of our earnings, obviously, to improve. So we are focusing on making sure that we are truly understanding our clients and their needs, and making sure that the different sets of services that we provide truly speak to the needs that they have.
All right. And it would be unfair for me to close this interview without asking you about the bank insurance, which is a critical area for banks right now as they try to, of course, diversify their business. For you, in closing, I just want to get your quick comments on this.
Well, so this is an important part of our business, and we started our bank assurance business about 3 years ago. It has grown very well. In the intervening period, just actually this year, we've closed on the purchase of a brokerage. This was the UJ's insurance brokers.
Sure.
And that has gone very well. The idea behind that is that we want to deepen the range of services that we actually provide in bank assurance. So it's not just simply off-the-shelf stuff that you can pick up and sell. We're also thinking solutions. So that's really what we were looking at over there. This is bringing in the kind of brokerage experience that will help us to design solutions for particularly our corporate clients.
All right. Interesting conversations there. We really look forward to the regional expansion. Are you looking at Ethiopia perhaps?
Well, when they open up.
All right.
When they open up.
Many thanks there, Kihara Maina, Chief Executive Officer at I&M Bank, just giving us the lowdown really on what's been happening in the financial sector, and is quite bullish that the regional market presents a host of opportunities for the industry despite the rate cap still being in force, which is expected to be lifted sometime in the month of September. Well, that's we bring it to a close on our interview segment for this week. Out of these talks, I'm seeing the blue chip companies really.
Yeah, you can see a majority of the companies are banking stocks, and I think much of the trading is in anticipation of the results. Even if you look at the market movement, banking stocks have really surged slightly over the past 2 days.
This is KTN News. Copy of the Pulse magazine tomorrow. The former Miss World Kenya Roshanara Ibrahim talks about picking up the pieces after she was stripped of the title 2 years ago. Find out what exactly went wrong and how she handled the crisis. We also take a look at the performances during the recently concluded Terminal Weekend, rating the artists, who rocked the crowd and who bombed. Then we meet Trankic, a DJ who thinks most of the other household turntablists are just overrated and hyped. He lets us into his world of music business and the pleasure of love. Plus, the hottest gossip in town, your weekly dose of fashion, fun, and football as the Premier League kicks off tonight. Pulse. Get a life. Free in the Friday Standard.
This week on Area Code, we visit county number 16 and explore an estate named after a famous Kamba icon. Fame Warren. Or is this yet another area struggling to accommodate its residents?
I call it my Mudaiga, my Karen.
When I first moved here, giraffes were walking around.
The population explosion witnessed here has come with its fair share of challenges.
We do not have any sewer line.
Mvua ikinyesha, huwa turali kwa hizi manyumba hata kidogo.
We shall be walking and talking to the area residents as we visit Syokimau Estate this week on Area Code.
This is KTN News.
Time for the market analysis for this week. I'm joined by Patrick Mumo, a research analyst at Genghis Capital, to take stock of what are the moving stocks for this week. Many thanks, Patrick.
Thank you for having me.
Well, looking at the week this week actually, the top movers, we're seeing Safaricom. The stock has moved about 3 million shares. KCB Group also doing well, 1.47. We also have Equity Bank moving 1.2. Barclays Bank as well, just under 5, actually 500,000. Kenya Power also doing well. And out of these stocks, I'm seeing the blue chip companies really.
Yeah, you can see a majority of the companies are banking stocks, and I think much of the trading is in anticipation of the results. Even if you look at the market movement, banking stocks have really surged slightly over the past 2 days, and that's largely attributable to investor confidence, showing that investors have good sentiment on the results, which are scheduled to be coming out from next week till the end of the month.
Interesting. And looking at Safaricom also, we did see Bob Collymore making a comeback this week, and he's saying he's ready to go down to work. And for the stock, of course, the investors have been looking forward to his return after a 9-month sick leave. From a strategic viewpoint of the company, what are your predictions really? What are some of the things that might be in Bob Collimore's in-tray?
If you look at the strategy of the company trying to grow its business lines, currently market share has been moving down, as noted by CAK this past week.
Yeah.
Currently at 67%. So if you look at the strategy, probably it's trying to reclaim that market share.
Yeah.
It will be part of the broader goal, but you also a lot of sentiment in the market that probably the improvement in the share price might be due to Bob Collymore coming back, but I tend to think such companies, Safaricom being a blue chip company, has a takeover plan in place. It has good management, and Bob Collymore is supported by an able team. So I think that no matter how things shape out in terms of CEO appointments and such, I'd say that the outlook is positive for the company, and we expect good things from them going forward. This week we have just been seeing a few price fluctuations from the stock, and nothing really significant to push it to the next level.
All right, and Patrick, let's talk about the top winners for this week. Of course, among the gaining stocks, Chorati, the stock is up 22.3%. Another agricultural stock we have is Sasimi Tea, is up 7.41%. And of course, not Eagles, it's actually up 8.87%. And it could be an interesting time for the agricultural sector from what the pundits are saying. I don't know, what are your thoughts on why are we seeing the agricultural stocks this week being among the main movers, really? The gainers, actually.
Okay, I think it's a continuation from previous weeks, because we have seen also William improving over the past weeks. So I think it's just sentiment in the agricultural sector following a very poor performance last year due to the poor weather conditions. They have improved drastically this year. I've seen that also reflected in the GDP growth, having come in at 5.7% in the first quarter of the year. So we expect in the agricultural sector, or companies operating in the agricultural sector, to post better returns this year, and this should also be, or is currently being reflected in the market prices of the stocks.
Interesting. And let's close off with a look at the top losers for this week, Patrick. Among them, we are seeing Deacons. Particular stocks, I've been monitoring them, and they've been on the losing end for, say, the last 3 weeks. And of course, we know what's happening in the construction sector, where they've been trying to bounce back after the prolonged electioneering period. But really, what do you make of Deacons as we wrap up?
If you look at Deacons and also Nairobi Business Ventures, one of the losers as well there's one common theme surrounding them, and that's the high competition, which was made worse by the slow business environment last year. So you find there's a lot of competition from the private sector, and especially from informal enterprises. And these informal enterprises are operating at very low costs which are pushing the prices down. Now the more established players are finding it very hard to compete with these other players, and you can see, for example, Deacons, they were exiting from Mr. Price just the other day. So when you can't, the reaction to competing with the informal sector would be either to increase operational efficiency, lower your costs, and if you can't do that, then you're forced to exit some of your ventures so that you can try and look for avenue for growth elsewhere, and that's what we are seeing with the stock.
All right. Many thanks, Patrick. Well, let's take a look at the Markets 101 for this week. Well, time for my favorite segment of the week, and that is Question on the Street. Let's take a listen in on this week's question.
Yeah, my name is Joseph Ojuki, a student at Masinde Muliro University. I would like to know how I can take part in bond trading.
So thank you for the question. So you can participate One market by opening a CDSC account with the central bank and engaging a securities broker. Alternatively, if you're imposed by liquidity and capital constraints, you can open a unit trust fund and invest specifically in a money market fund, which will put your investments in short-term fixed income securities.
All right, that is a question for this week, and of course Patrick just has the right answers for you. Well, it's time for us to take a look at historical fact this week. Well, and that's it for this week's episode of the Trading Bell. Many thanks for your company as well as your feedback. Remember, you can always engage with us on our social media handles appearing at the bottom end of your screen, and we'll be able to sample some of your views in our next show. Well, many thanks, Patrick Mumo.
Thank you.
Making his debut here on the Trading Bell as a research analyst from Genghis Capital, fresh off the oven, shooting right from the hip. Of course, you can only get this analysis here on the Trading Bell. My name is Abegina. Have yourselves a lovely weekend.